G'day folks, welcome back to another update for natural gas. Now we've had a break of support levels in over the weekend, and when the trades open today on Monday. Now I've also got a user request to help identify buy-sell setups, and I'm going to go through a very slow example on how to use the buy and sell setups with our CCI 150. And we're not looking at the ETFs today, only because the market hasn't opened in the US to trade the ETFs so far. So we're only going to go the natural gas commodity price. So let's get stuck straight into it. So if you're a regular of the channel, you know that I always look at the monthly, the weekly, and the daily. Now the reason I do that is because you might be trading the whatever instrument. This is again this is natural gas, but you might be trading some shares or some forex currencies, whatever, on a higher time frame. So the reason I'm going through the monthly, weekly, and daily is for you to helps identify the trend. So for example, if you're trading on the weekly, you want to make sure you're going in the same direction as the monthly. Or if you're trading on the daily, you want to go in the same direction as the weekly. So again, in this example, for natural gas on the monthly, it's bullish. Both the CCI and the price are above their respective moving averages. And again, if you're new to the channel, these moving averages are identified in the description below for those video references. The monthly is bullish. Now the weekly has been bullish now for some time, and it's actually broken into that moving average range, giving us a neutral signal. So if you're trading on the daily, you want to be cautious about going long or short, because you want to be well above those moving averages to go long, or below the moving averages on the CCI to be going short. And on the daily, you can see there it's already broken below the CCI moving averages, even before our last video. And actually on open today, it's actually broken and gap down below that diagonal trend line. So let's first go to what we're looking at in terms of a trade setup. So again, we're looking at, in terms of entering, you want to first identify the higher time frame trend. So again, if you're trading on the daily, you want to trade in the direction of the weekly. So what that looks like, if we go to let me get the chart set up here. If you want to go to the trade setup, here I've got the weekly, and here I've got the daily chart. So if you're trading on the daily, you want to go in the direction of the weekly, so you want to be going long. So what I've got back here, you can see back there, September 9, the CCI broke above the moving average band, and you can see there on the price chart as well, the candle broke above. That was also above the moving average band. That one broke above it, but notice the CCI was still in a neutral positioning. So you want to you could have got in on that week, but just to be conservative and cautious, you want to make sure it breaks above and showing you a clear break above. And I'll go an example of what it may look like otherwise. So that would have been your first entry. Now that coincided with this period back here. Again, one of these candles back here would have given you a nice break above on the daily. So the way you do it is, first step is you make sure, again, you're trading in the direction of the higher time frame. So we're going long. So assuming we're back here, we're going long. So we only take long trades. Next step, going back to our rules and a trade setup, you trade and open the trade when the CCI and the price show a breakout from the moving averages. So what that means, as we're alluded to, the CCI broke above the moving averages on that one there, and on that candle there, it's also above the moving averages. So I've got a ruler here. We draw a ruler. Now, where we close it is when the CCI breaks or touches inside that moving average range. So you would have closed it at the close of that candle, and that one there. So again, going back to our rules, we close a position when the CCI enters the moving averages. So again, going back to our chart, that gained 12.27% or 279 points in 15 days or 15 bars. This is a daily, so 15 days of trade. Now you'll notice it just touched that CCI band, but that was still a bullish candle. You might say, well, I probably got out of it too soon. Yeah, you probably did, but again, you want to maximize your profits. Now, what we do then is we get back into the trade when that CCI bounced off that moving average, and you would have got in at the end of that, assuming you get into the close of every day. So you would have got into that trade on that candle, you would have followed it, follow the CCI, and you would got out when that CCI breaks into that moving average range, which happens to be the close of that little red candle up there. Now you'll notice that's near the top of each of these little periods, and that returned 10.24% or 277 points in 13 days of trade. And you would have avoided going long because the CCI started breaking below that moving average band. Next trade would have been a break above the CCI there and the price above the moving average. You would have got in there. Now you'll notice this one, you would have got out with a small loss. But you'll notice as well, the moving average band starts turning down, so you want to be very cautious. This one was turning down as well, but it's notice the CCI band on the price was moving up, whereas this one's starting to move down. So that's where you may want to avoid taking those trades. But for argument's sake, let's just take those trades. So that was a loss. It was minus 3.7% or 113 points with over 4 days of trade. Another entry here, the CCI breaks above on that little bullish candle, and you would have got out when that CCI broke into that moving average range there, and that would have given you a 8.96% gain or 261 points over 15 days. Since then, the price dropped off again. Now you'll notice a couple of things here. We haven't identified a bearish divergence yet, but you'll notice the price band is starting to turn down, and so is the CCI moving average band. So giving you a bit of a warning. Now this would have been a false break with a small loss. Let's mark it, and you would have got out on that candle there. So that was a 5.4% loss, 179 point loss over 2 days. Another entry there on that little candle there, and you would have got out when it touched in that moving average band on that one. That was a 2.4% gain, 78 point plus over 6 days. This one, another, that would have been there, and you would have got out on that close of that day. That was a 4.3% gain over 4 days. That would have been another break there, and you would have got out on that day. That was a minus 1.9% loss, minus 73 points over 3 days. And since then, one more loss. That would have been an entry there, and you would have got out on that candle, minus 3.98%. So again, going back to our rules, close with when the CCI enters the moving average range. Now, one thing you've got to notice as well is, the last rule is watch for any divergence. Now, since here, you'll notice here, go back to the charts, you'll notice here we've identified our first bearish divergence between those peaks, almost a double top on the CCI versus higher highs on the price. That was your first warning that there's a bearish divergence. So theoretically, we shouldn't have taken these trades, all right? Because that's telling you the price is weakening because of the CCI weakening. Now, in this case, there was potential for an upswing, and sometimes this actually continues higher, but you want to pay attention to these bearish divergence. So that would have been your first indication at that point when that new high was made on the price, and that high was made on the CCI, and you should not have taken any trades after that. Up until that point, there was no real sign that CCI is moving in line with the price. So theoretically, we could have taken all those trades within that divergence range. So what that looks like, so if we go back to the gains we made here, let's mark them. So 279 points. So what I'm doing now, just transferring that to the spreadsheet, and 12.27. And that was over 15 days. Okay, so what that looks like on the spreadsheet, I'm just marking in the points, the percentage gain over so many days. So let me just fill that in, and I'll get back to you. Let me pause the video, and I'll get back to you. Okay, a few minutes later, thanks for waiting. What I've done is I've transferred these amounts, points, percentages, and number of days or bars into the spreadsheet. So what that looks like is this. So on various days, I've had a couple of losses there, and we stopped trading going back here, we stopped trading after we saw that divergence. So that included some of these losses. There's minus 179 there and minus 113 there. So the rest were all positive. So you can see there, that was a total sum of 751 points gained, an average of 4.1% of gains over a trading days of 59 trading days. So not a bad return if you annualize that for the return and number of points gained. So again, always pay attention to these divergence. Now, a couple of other things to look out for. So if you go back here, for example, again, notice here, I want you to notice the CCI is above the moving average range as per the color coding there, but notice the price is below the moving average range on the price chart. So what you need to do is you want to make sure that the price breaks at least near you probably could have got in on that candle there within that range, but ideally above the moving average range on that candle. The reason I say that is because if you go back to this area, you'll notice back there that CCI broke above, but then it bounced back down again, and that could have been a continuation of a downtrend. This one broke above, and you want to wait for it to break above there on the price. And notice what it did, it dropped off a bit. It did go pretty much consolidate going sideways, but then it did appreciate, and it closed out at that point there to the downside. So again, you want to make sure ideally that the price and the CCI are broken above the moving average band. So again, just be mindful. I'm demonstrating here the weekly and a daily, but you can trade this on any time frame. So I normally demonstrate the 1 hour intraday time frame on the videos. So if you're trading on the 1 hour or the 2 hour, whatever, make sure you're following the trend on the daily. So here, for example, you would have taken short positions on the daily, based on the daily, from that position down. So you would have taken only the short trades. And at the moment, you would have been doing quite nicely had you been going short during a lot of these periods. So again, just a refresher, make sure you follow these basic rules in terms of trading with the direction of the higher time frame. Open the position when the CCI and the price break out from the moving averages. Close the positions when the CCI enters the moving averages. And watch for any divergence, which gives you an early warning signal of reversal of price, especially if you're going long, look out for any bearish divergence, or if you're going short, look out for any bullish divergence to help assist you in exiting the trade early, or from not taking trades at least. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.